Since the last episode, ASTS absolutely exploded, briefly making me a 10x gain, and then it fell by about 24% from its highs. So what's going on, what's about to happen, and what's my plan for this stock? I won't go into details of this company's business plan or any specifics because I discussed that in the last episode. But in short, they want to bring mobile coverage to the whole world with satellites. We left off at the beginning of July when the stock was trading at around $11, and since then it went to as high as $39. A lot of things happened in the past 2 months, which will also have an impact in the months to come. So let's quickly cover them. On July the 25th, they announced that the first 5 satellites called Bluebirds completed final assembly and will be ready for shipment in the first week of August with a 7-day launch window in September. These satellites are going to provide US nationwide non-continuous service to over 5,600 cells. On August the 5th, FCC approved ASTS launch of the satellites and granted an initial license for space-based operations in the United States. On August the 8th, the satellites finally arrived at Cape Canaveral for the upcoming launch. And then on August the 14th, the company published its business update and second quarter 2024 results, catapulting the stock to more than $30. Why? Well, firstly, the orbital launch is expected to be in the first half of September, and that is going to be a make it or break it type event. Secondly, their ASIC chip tape-out phase has been completed with Taiwan Semiconductor Manufacturing, and that chip is expected to support up to 10x improvement of processing bandwidth per satellite. And finally, initial Block 2 Bluebird planning and production of 17 satellites is underway at ASTS manufacturing facilities in Texas. But more about that later. Now, aside from this amazing news, what led to the stock jumping even higher to almost $40 was, in my opinion, the fact that Wall Street bets got a fear of missing out and started heavily buying. And as the stock got higher and higher, some people started taking profits. At the same time, people from Wall Street bets were still buying. And when the tides turned and the stock started falling, those same people who bought at the top started panicking and closing their positions for a loss, creating even more selling pressure, dropping the stock further down. To make it even worse, on August the 28th, the company announced the redemption of public warrants, which isn't even that bad, but people not knowing what it means, thinking it's a massive dilution, started selling in masses, dropping the stock to as low as $26. So here is what it all means. ASTS and a lot of other stocks have warrants. They're like options, but a little bit different. You see, by having a warrant, you can buy a company's stock at a specific price known as strike price before the warrant expires, before the expiration date. Right now, it still sounds like a call option, but the key difference is that after the expiration date, the warrant becomes worthless, even if the stock is trading way above the strike price. And that when you exercise a warrant, you pay the strike price to the company and they issue a new share to you, which means that the stock gets diluted. You can find stock warrants by typing the stock ticker and adding a W at the end. ASTS warrants would expire on April 6, 2026, but ASTS is entitled to redeem its public warrants earlier if the stock has been trading at $18 or more for 20 trading days within the 30-day trading period. From what I could find, there were about 6 to 7 million warrants. So if all get exercised, 7 million new shares will be added to the stock market. And with about 157 million shares outstanding, that's about a 4 to 5% dilution, which in my opinion isn't even that devastating. In fact, I think it's great, because that way the company gets about $70 million now instead of in 2026, and those $70 million are way more useful now when the company still needs funding for Block 2 satellites than 2 years later when it will be generating revenue from the satellites. And this brings us back to the latest earnings report, in which it was stated that initial Block 2 Bluebird planning and production of 17 satellites is underway at ASTS manufacturing facilities in Texas. In the same earnings call, the CEO said that the first of the 17 Block 2 Bluebirds would be ready to launch in the first quarter of 2025. This, combined with the additional funding from the warrants and the upcoming launch of Block 1 Bluebirds, makes me more confident in the company's success than ever before. Yes, the stock is currently falling because of getting too high up on Wall Street bets hype. But my plan hasn't changed. I'm going to hold for years and I won't sell a single share even though I'm currently up by about 800%. The next stock I want to talk about is Intuitive Machines. On August the 14th and a few days prior, I bought about 1000 euros worth of Lunar stock at an average buying price around $3.64. My plan for the trade was to continue buying more as the stock would continue falling until December, because that is when their next mission to the moon is supposed to launch. However, I didn't anticipate Wall Street Bets heavily buying this stock after missing out on ASTS. So just because Intuitive Machines is also in the space sector, it jumped up like crazy, making my position go up by 50%. And because I thought it went up on hype alone, I sold my whole stake for a gain of about 500 euros. My intention was to jump back in after the stock would slowly fall back down, but then it announced a $117 million contract from NASA, so I'm probably not going to get a good entry point of below $4, but one can hope. With the money from Intuitive Machines, I bought a lot more of Canadian Solar, bringing my total position to about 212 shares, as I bought most of them right after the stock tanked on earnings. The idea behind this trade is that it's the most undervalued solar company and that it has a way better long-term plan than other solar companies. You see, Canadian Solar is one of the few solar companies that also makes battery storage solutions, and on top of that they're slowly transitioning from just building and selling large solar power plants to owning them. That way they'll generate consistent revenue from selling electricity. And the funniest thing is that the solar power and battery energy storage plants in operation are currently worth more than the company on the stock market. Having that said, Canadian Solar has quite a lot of debt, so in my view it's a risky long-term play with great potential, but I likely won't add more to it even if it continues falling. Another stock I bought shortly after earnings is Intel. I bought a total of 159 shares at an average buying price of $20.85 because they are spending absolutely huge amounts of money, even cutting the dividend, just to fund their research and development. And I think there is a greater potential reward in investing in stocks while they are heavily investing in research. On top of that, I just love investing in stocks that fall straight down, especially when a company that is in my opinion too big to fail drops to its 2011 levels. I hope it falls further down in the coming months so I can just continue adding more shares, because I honestly think this is one of the safest and easiest doubles you can make right now. It kind of reminds me of when I was buying Meta while it was falling towards the end of 2022. To sum it up, I plan on holding ASTS and Canadian Solar for a long time, while investing more money into Intel and Intuitive Machines if the price is low enough, and I might add a bit more money into quantum computing stocks like Rigetti Computing, Quantum Computing, IonQ and D-Wave Quantum. If you want to learn more about ASTS's and Canadian Solar's business plan, click on one of the videos that just popped up. If you like my content, make sure to subscribe, and thanks for watching.